growth even with the downward revisions. And we find quite often that economic growth news is downwardly revised, but so we're headed higher. It really is a newsday trade. If you've got the news comes in better than forecast, the market should trade higher. So the not really too interested in getting short until we get a retest failure, and we're not really interested in getting short until we really test the 50 to 55 area, this area right in here. So our 49.50, 51.50, or 54.50 or better areas are sell zone now, based on better than expected early news. We got higher lows. We had the news. And so here we are. So with that kind of news, being a buyer to test the 50 area anyway was the trade. Now, to trade higher today and stay higher, we're going to have to build volume basically greater than 50. So how could you have traded the news? If bullish news doesn't rally the market, sell it. That's what we were operating with this morning, and we did not get a very powerful reaction to the 8:15 Central News, industrial production, and we said that would be the focus. So how do you trade that information? Okay, the news is right here on that bar, and the reaction, the first reaction, is a sell. So we've got this low, this little band of support right here, and we know the news is plus. So what happens when we get this news? This begins to build. We also had to the tune of about 9,400 on the entire market on the buy side. So we come in, we get a W pattern. You can be long right here in the 43 area. Market gets up to 45. It's 45. And that's the first thrust up. So it's not, the first one's not the one that pays off. The second one is the one that pays off. So the market comes back down, retests support, and getting long again in the 43, 44 area. First stop is 46 plus. Then we make it up to 48.50, and we've gotten some selling here. So if we come into this area right here on a retest and we can't get higher, and some people would have taken the short here at 46 to 46.50 right in this area, then we can get short to come back and test our 40.41. But news does move the market, and the first feedback you got that news was going to work is right here on the net cumulative buying, and it was the same for both markets. So bullish news rally the market or not rally the market? That's where we are right now. Looking at our cumulative volume and tick chart that someday will be titled F6 to eliminate the confusion, but not this week. Okay, the large buyer commits to the market in this area right here. Price action starts up right here, and ticks go positive right there. So we've got news that is bullish. And the news is in this area right here. So the lead time between the news, you can see right here that the 50 lot player had committed to the market in a big way, and he would have committed to the market on the 839 bar central. If we take a look at the entire market on this screen, here's the news in this area right here. The entire market had gone long again, pretty much where the 50 lot player had. And we got price action. Price starts up here. And so the ticks and the volume were going to the buy side before it was manifested as, before price manifested as this buying. So volume leads price. Now, this is a pretty good example of that. What we also know is that the 50 lot player quite often fades the market, buys into weakness, sells into strength. And the way that we have to temper this information is that the market can move without the 50 lot player price-wise, but the bottom or top's not going to come off the market without this player. And that's the way that we have to temper it. Any questions on these screens or the different takes that different way to use this? Vladimir, do you shoot 50 lots when you trade? Do I shoot 50 lots when I trade? If you had to, just off the top of your head, who's a 50 lot trader, an individual or an institution? So anybody that's got the capability of shooting a 50 lot has got some staying power. And if they're in an established long-term institution, and most are that can shoot that kind of size at the market, then they pretty well know what they're doing. Now, what we see when the market is starting to be heavily sold is that the 50 lot player almost always steps in and buys as the market is being sold. And it's my guess the 5 large money center banks are directed by the Fed to buffer the selling market. The Fed doesn't mind the market selling, they just don't want the bottom to fall out of it. And the Fed has set a trading range of 1100 minus to, I guess now 1250 plus is where they are comfortable. So the 50 lot player, because of their staying power, because of their ability, their size, and you can just see it when the market trades. You can they don't abandon their positions quickly either. So you have to be cognizant of what the 50 lot player is doing. I track the 50 lot player. Bill Thomas has a different take on it. Bill Thomas wants to see everybody, if everybody's lined up on the same side of the market. So Bill does not filter for 50. But we've got a lot of experience with the 50 lot player on our F3 and our F4 screens. And I kind of view them as a slower moving average, like a 40 or a 50 day or period moving average. Takes a while for them to change their mind. Okay, Vlad. You want to see where the 50 lot player steps in? They step in on that bar, step in on that bar, step in on all those bars right there. So I look for these really, really big bars, long bars are what I call them, to confirm whether I've got a good trade or not. But this is a 50 lot filter, and it's this long bar that shows you when they're getting active and really are stepping up to the plate. On an average, it's a green line, they're a buyer, a red line, they're a seller. Okay, haven't made it to 23, 27, the top of our sell band. 20 to 24 has been resistance, as it has been, or was yesterday, so we haven't gotten through it. The news this morning has not been favorable for the financials, yet they haven't broken, so we are getting some support from what's going on in the EU. Obviously, treasuries are trading better than Italian, Spanish, French, Portuguese, Greek paper. I think one of the reporting services this morning said there's 104 more debt offerings out of the PIGS nations before the end of the year, and I think it's Italy has to roll $280 billion of debt in the next 12 months. So they'll be doing what the Fed's doing. The only way for the EU to slither out of this is to devalue their currency. And the Germans will howl about that, but they may not have a lot of choice. A lot of people don't talk about this, but all that money that was sent south, all that money that was borrowed by the PIGS nations, a lot of that went to buy materials from your northern European manufacturers, etc. And they benefited through economic growth and creation of wealth artificially. Now the bill is becoming due. No one likes to talk about that, but Germany doesn't make all our money off the U.S. or the Middle East or points outside of the EU. They make most of their money in the EU. So there's just a lot of stuff going, and Germany may be hauled kicking and screaming to the altar of currency devaluation. That's the easy fix. And given human nature and the way we tend to do things, the easy way out always has the most appeal, or it's the quickest sell. So where are we stopping right now? Just visually, and what is it that makes the market profile reliable and valid as a theory, it's right here. Value area lows and highs. So the market profile community lines up on the value area highs and lows, and they fade the market activity that took them to that. So the top of value right here was 20, and 20 is basically held as resistance. Okay, when we looked, while I did want to sell 23s to 27s this morning, sometimes the market won't let Charlie in where he wants to get in. So the first place that we had resistance was 18 to 20, and they got stops above 20. And I said to get short, we'd like to see a retest before we took the trade, our normal setup. So the phenomena that we're dealing with all the way through here is new highs. And now we get our retest. And we have the requisite amount of bars of white space between those two highs. And if you took the trade in the 19 to as high as 20 area, off of this bar right here, you had to suffer through a retest of the present high. Now, just visually, what is the difference between the high that came in here and the high that comes in here? And there's nothing wrong with taking the trade in this area. Anybody see the difference? Well, it's definitely a balance bar, but we got deceleration on this right up here. So, I mean, this is a good trade. Where does the stop have to be? At least 2 ticks above the pivot point, because the whole premise of the trade is that this is resistance, and now that resistance has been retested. Now, over time, you're going to adjust your stop to match your average net winner. But when you first get started, if this is resistance, you don't know you're wrong until you take out resistance, and your stop has to be 2 ticks above that. So what do you get off this retest? You get a trade into volume, and volume holds. And we come up here, and we get a retest of that high, plus or minus a tick. And you could be short in the 19 area once again to as high as 19.5. And the market has produced another trade into volume. So our idea this morning was a trading range. Support at 8 to 12 to get started. We got that one just right. And we thought it would be 24 to 28. But so far, 20 is held as resistance. So not perfect, but close enough. And then you take our setup, and you're got a trade, and it is a good trade. And if you take this trade consistently, it will put money in the account. But somebody was asking me the other day, how do I know if it's a good trade or not? I've got all these ideas and the rest of it. How do I know if it's a good trade? You can't know if it's a good trade, and you won't know if it's a good trade until it's over. And that's the rub. If you can't operate under those conditions, you're not going to be able to do this. So we had a buy at 13. You could have entered between 14 and 15 and a half. We had hoped to sell 23s to 27s. We got our setup at 20 and a half, and you could have sold 18 and a halves or 19s as high as 20 if you put a resting limit out there. And I think over time you gravitate towards resting limit sells against pivot highs. We'll go back and see if the E-mini can break it out. If we come back up and we can't get through our 48.50, then we've had a retest of that high and it's held. And then we can see where support is. There's a little tiny dent in the volume at 130.15 and a half on the F4 screen. Probably not enough to catch most people's eyes. It split the mode and the mean. They got stops below 16. So a couple of three things could have come together there. Okay, this is an aggressive trade, but if you broke this bars, if you broke the 1018 bars low, it's basically a mean green trade that you're fading. So you're short at 45.50, 46, and what do you have to see for this trade to work? And we'll watch the F5 screen. Okay, I got a conference call here in about 5 minutes, so things are going to happen quickly. So you're short in the 45.50 area, and you want to see a pink stripe, and we've got that. You want to see this blue bar at the bottom getting shorter, so we're 18.2 on that. We're 79.52 on the 50-lot player. We want to see those numbers getting smaller. You've got the mode at 44.25, and you've got the previous high at 44.75. So right now we've got everything going for us on this trade. Volume is building lower. The blue bar is getting shorter. We're at 14.9 right now, 15.4. Boy, 500 came in a hurry right there. We're at 77.53 on the 50-lot player. He has not budged. So we've got to bust 43 to stay with this trade. So if you were short at 45.50, you haven't quite gotten your 8 ticks yet. We're still in a pink stripe. Right now, as long as we stay below 45, we can trade lower. Need to take out 43 to stay with the trade. Can anybody see that? Okay, the mode that we need to take out, now we got a blue stripe and we got back up to 45.75, excuse me, 45 and a quarter. So we weren't able to break 43. And if we come back down and we can't crack that 44.25 area, then you got a decision to make. And I'm here for about another 2 minutes. Now you're really in a situation right now that you had to, if you wanted to break even on the trade, you had to put a limit buy out there. You got to take yourself out now. There's nothing wrong with the trade until we trade above 47 and a quarter. But 43 was the number that had to be taken out. It didn't. 47 to 43.50 was 3.5 points, usually about 3 handles. And one of the things that we talk about is that you got to have your trade in 2 bars. I mean, if you don't hit your trading objectives in 2 bars, then it's pretty hard for that trade to develop. Now, we don't know if we're wrong in this trade till it goes through 47, but you had a shot at making 4 to 5 ticks, and right now the market's headed back up. The blue bar is going against us, so there's no reason not to expect a retest of 47. But a lot of if you're going to be successful in the E-mini on this type of trading, you've got a lot of trading decisions to make, some of them in less than 30 seconds. Successful E-mini trader will put something on and he'll just know that he's wrong. Well, John, on the note, you didn't have a V bottom. You had you had a V bottom, but you had lots of retests at 20. So there's that on the E-mini. I mean, you've got W patterns that are working with failed auctions, but we're getting a lot of chop. The market's not producing much in the way of follow-through. As long as 47.50 holds, 47.25, that short is still good, but it's just one choppy mother. I've got to go make that conference call right now, so I'm out. So you scratch the trade. If you were nimbler than I was, you had a shot at 4 ticks, give or take. But there's just not a lot going on, and it's very, very choppy. And you have to be cognizant of that. And if you, John, I suggest you go back through your research and go back on the trades that you took and see how much is actually there in your trading journal for the trades that you actually do take, and that'll help you get your trading target. A number will fall out. A number will fall out that makes sense. But I've got to scoot right now, and like I said, there's not a lot going on. There's still nothing wrong with this. You take out 40, was it 47 or 47.25? But if we come back down now and you don't take out 43, 43.50, then you should get out of the trade. But this is a pretty choppy market right now, and it's pretty difficult to trade. Okay, I got to go.